Okay, I recording this video on Friday the 22nd of April 2016. Hope you had a great week's trading this week. So kind of losing my voice a little bit, but I'm going to persevere and kind of bash this video out. It's about 7:54 p.m. here in Hawaii on the beautiful island of Kauai. It's gone midnight in Chicago on Friday evening. Probably won't get this video out until sometime on Saturday, so you'll have time to watch it on the weekend. Going to talk about low risk entry points in this video. That will be kind of the topic. Got a good question from Nathan about those today and wanted to respond to him. But a couple of things. First of all, the reason you've not heard from me very much this week is the surf has been going off, and I've just been spending as much time as I can in the water. Some of you will know that that's kind of the reason why I'm here in Hawaii. Love my surfing. And normally we're here from the beginning of January till the beginning of April. This year we got our plans kind of changed around a little bit, and we kind of ended up coming here mid-February, and we're staying to the beginning of June. And normally by this time of year, kind of the winter swells would be dying off and it'd be pretty quiet, but we've had epic swells this year. It's just been unbelievable. People on the island tell me that it's been kind of non-stop since October, and this last week has just been beautiful, clean offshore. Last 2 days have been really sunny as well, and the next 3 or 4 days are due to be good as well, so just count myself lucky. The other thing that I've been lucky to see over the last 3 or 4 days, I've been in the water at the same time as Bethany Hamilton, who's one of the local surfers here. If you know about surf culture, you'll obviously know Bethany. She's the young lady that had her arm taken by a shark about 12 years ago, here actually on the island of Kauai at a break north called Tunnels. And she's a professional surfer and surfs with one arm, and she puts my surfing to shame. It's unbelievable to watch her in the water, how she paddles into waves and just surfs beautifully. A goofy footer, so even harder for her on the wave that I'm surfing, which is a right-hand break. But anyway, just beautiful to kind of watch that. Surfing is one of those sports where you can actually find yourself side by side with a professional surfer. There's not many sports where that's the case. If you're playing tennis or playing golf or whatever, you rarely find yourself on the same court as a professional. But in surfing, it does happen. I've had the fortune to be in the water to watch Tom Curran and Martin Potter, both of whom were world champions, just amazing surfers. Anyway, Bethany's an inspiration. Just to watch her kind of out here is just absolutely beautiful. Anyway, so a little bit of a digression there on what's going on in Hawaii. So want to talk first of all very briefly about the seasonality chart, and then let's talk about low risk entry points and review this question I got from Nathan today. So seasonality, we were due to have this V kind of reversal pattern for tax time. This is the seasonality indicator underneath the price bars here on the daily chart of the E-mini, and it back calculates the average move on that day over the last decade or so, based on how much kind of data you load into your charts. Below the zero lines is sell-off days. Above the zero lines is kind of rally days. And this is what we were doing a year ago, and this is the tax time reversal that we normally have. Usually a little bit of a sell-off into tax time and a little bit of a rally out of tax time. So this is what we were due to have, and this weakness kind of going on here. And you'll be able to see, if you look at the price bars up there, we just had strength, strength, strength. So when we were supposed to be selling off into tax time, we didn't. And out of tax time, though, we have had pretty good rally kind of going on. It's just continuation of what happened over the last several days. And this is the forecast for the next few days, these 3 blue dots, kind of based on what was happening a year ago. And they're forecasting a continuation of this rally. And I think we're going to get a little bit of strength continuing into Monday. So there we go. Sometimes seasonality patterns work out picture perfect and beautiful. Sometimes they do not. This year, the sell-off that we had was due to have into tax time, did not eventuate, but the rally that we've had out of tax time has actually kind of happened. We've had strength, strength, strength. This is the rally that everybody's kind of hated, and it's because no one's participating. That's why we keep on busting up. Everybody wants to be short, and we kind of breaking into new highs, busting the stops, and just keeping this thing going. So there we go. All right. Let's talk about low risk entry points, because I got a good question from Nathan today, and he says, with low risk entry points, what confirming indicators should he be looking at? Now, the low risk entry points are these little dots that you'll see above the trending system on the multiple time frame view of the world. This is what the multiple time frame kind of view of the world looks like with the trending system on. This is with Better Pro-Am. and better momentum on the charts. This is with the trending system on. White for weakness, red for strength. And the trending system has these little dots in here above the trend changes for low risk entry points. Once we have a trend change, do we jump on board at one of these low risk entry points? And that's what Nathan's asking. He's saying, how can I filter out these good and the bad low risk entry points? Here's the answer. The secret is trade in tune with the highest time frame. The highest time frame, better sine wave on the highest time frame, will be these solid, really solid support resistance lines. You need to be trading in tune with these lines: resistance, support, resistance, support, resistance, support, resistance, support. Okay. Now, as I go through these charts, you'll see some different variations of how the price bars move around these different support and resistance. Sometimes they bounce off just beautifully, like these support and resistance. Sometimes we overshoot a little bit to the downside, a little bit to the upside, and so on. And then sometimes we continue on through the break, and we have to make a pullback to end of trend because we've broken into a really strong trend on this highest time frame. But you need to be judging what is going on in the highest time frame and trading in tune with that. So what I do is I filter out the good and the bad low risk entry points based on what that highest time frame is doing. So for example, into this high going on here, we had a few things going on. First of all, pullback to end of trend on the lowest time frame, and that's shown here by an early little gray small dot. Pullback to end of trend on the intermediate time frame, there's the medium sized dot, and then resistance on the highest time frame, exactly the same thing. And so I'm looking for this trend move has exhausted itself, we've come into resistance, I'm looking for a low risk entry point that's now in tune with the weakness that we're going to have here. There's the low risk entry point. Bang. Beautiful little signal right up here, and that took us into this downtrend move. Now, the support that we've had, after this horrendous, December, January kind of sell-off that we had, it was marked again beautifully. Pullback to end of trend on the lowest time frame, that little red dot there. Pullback to end of trend on the intermediate time frame, the slightly bigger dot there, again happening around cyclical support. It's almost the mirror image of this. Even though the price patterns are kind of looking a little bit more random between the two, better sine wave is still pulling out those signals with the cyclical and the trending energy, showing us the trend moves are over and we're coming into resistance on the highest time frame. The trend move is over, we're coming into support in the highest time frame. So we're needing to look for low risk entry points, and there it is, bang, right there at that low as we kind of break out into this uptrend. So find those low risk entry points that marry up with your support and resistance on your highest time frames. Now, I'll show you the other charts which show some instances of overshoots, some where we bounce off perfectly, some where we move into bigger kind of trend moves. But you'll be able to see how those low risk entry points kind of look. Just a little note on this chart. So all the strength that we've had since the beginning of February, we have still, all these red bars are showing we're still in an uptrend on the trending system. We're coming into some form of resistance here because the lowest time frame has kind of gone off. But this move is not over until we see a pullback to end of trend on the intermediate time frame. So you see there's the intermediate time frame resistance that we broke above into an uptrend. The pullback to end of trend's only gone off on the lowest time frame. That's an early gray signal, early pullback to end of trend. We've got to go see a pullback to end of trend like this one on the intermediate time frame, like this one on the intermediate time frame. Now, where that happens will signal whether we're going to have continued strength above this resistance line and go a full pullback to end of trend on the highest time frame, or whether this is just an overshoot that we can't get by or a lot further past 2100, and then we start to roll over and go the other way. But I'm not making any kind of decision like that until I see that pullback to end of trend go off on that intermediate time frame. So play in tune with the highest time frame and look for those pullback to end the low risk entry points that sync up with those highest time frame charts. Now, I'm going to show you a couple of other charts. The 135-minute chart is a really nice chart, but it's pretty volatile, in terms of the data points that you get with a minute chart or an hourly chart and so on. This is why I like tick bar charts. I really like the smoothness of tick bar charts. This is the highest tick bar chart that I look at, the 4500 tick bar chart, and this is what's happened over the last week. This is the momentum and better pro-am view of the world with these bars, these vertical lines just showing the open and close. open and close of Friday. This is the overnight activity leading into the open on Friday. Friday, Thursday, Wednesday, Tuesday, Monday. So today, so this week we had a rally for beginning part of the week and a sell-off in the latter part of the week. Now, this is what I mean by playing in tune with the highest time frame, where sometimes we'll get overshoots and sometimes we'll get pullback to end of trend moves. This was a trending move on the highest time frame because we were above resistance on the highest time frame here that maxed out with exhaustion buy, and then we came back to make pullback to end of trend on this highest time frame. We continued to overshoot on this one, but this one didn't come and make pullback to end of trend. Then we've come back and made cyclical support kind of down here. Sometimes we bounce straight off these highest time frames. Sometimes we overshoot and then kind of come back down. Sometimes we've overshot and we continue up into another kind of trending move. Your job is to figure out, trade with this highest time frame, what's going on there, and figure out what's kind of going on. The trending system will keep you right. So into this overshoot, that's where the trending system said no, we've reached pullback to end of trend, we've had it on the lowest time frame, intermediate time frame, exhaustion buy, and then we get some weakness here kind of going on here. That's our low risk entry point after there where we've overshot and we come back into support. This one support comes in, then we should be looking for the low risk entry point as we break into this uptrend. Now this one comes too late, really, a little bit too late. We had a double break, which is another place that you could start to enter if you get a double break of resistance or supports, at the same time happening almost simultaneously. That's a good place to get in if you hadn't had a low risk entry point kind of prior to that. This one happens is actually a pullback in an uptrend scenario going here. Yeah, we kept on going on, but that one's not ideal. That's a little bit late, but it's still in tune with the highest time frame because the highest time frame is saying at that point we're still got support kind of going on. Now we overshoot. The trending system still says we're strong. We've got strength going on here. It's not until we start to break into a downtrend here after a whole bunch of flush patterns going on. We'd had our exhaustion buy bearish divergence and we're flushing out all of those buyers at those highs, and then there's the low risk entry point. So we overshoot that one. We know we should be looking around here for short entries, but the trending system hasn't rolled over. It rolls over there, and that's when the low risk entry point comes in there. Right at that point, at a flush, beautiful pattern, comes in with another cyclical resistance we can't get through. We're in a downtrend. Now what's happened over the last day is we've had cyclical support coming on the highest time frame, pull back to end of trend on the lowest time frame. We've had cyclical support come in on the intermediate time frame here, and the highest time frame support. So we got pullback end of trend support going on. Whole bunch of supports with exhaustion, sell, and bullish divergence. So now the highest time frame is saying we're above this. We should be looking for long trades, and there's the low risk entry point. Comes in at the end of the day, so obviously not going to be taking a trade late in the day, and certainly not into the weekend. But that'll be interesting as a setup for Sunday evening into Monday. Let's see what happens if we start breaking above the high 80s and 90 and so on. We're into a confirmed uptrend. But we've got the first sign of a low risk entry point in tune with the highest time frame. Okay. Another point just to make on Friday's trade, which was interesting. Always look for blue professional bars during the day on this 4500 tip bar chart. They're really instructive as to what's going on. A few days ago we had them taking profits here and into these highs. You can see blue professional bars, blue professional bars. The ones at the end of the day are more difficult because they're closing out positions. Professionals here are closing out at the end of the day, getting square, and at the end of the week they're kind of getting square. So directionally I find it very difficult to figure out what they're doing at the end of the day. But when they happen midday, during the day's activity, all these blue professional bars coming at the low at 75, holding here, that's significant, and that's I can interpret as them buying the lows, and we've rallied off there. What they're doing at the end of the day, just kind of getting square. But let's watch for Sunday evening into Monday's activity, and if we get a rally kind of based off this low risk entry point, that's kind of confirmed long trade kind of going in there on this highest time frame. Last chart to show you the day trading chart, the 500 tip bar chart. And again, this is today's activity. This is better momentum, better pro-am on these bars. This is the close of today. This is the open of the day. So the open of the day, we had a little bit of rally into resistance. And you can see support, resistance, and then we break support, so we're in it. And when we have a big move down like this, we know we're in a downtrend. We've got to make pullback to end of trend. So resistance comes in here. There's the end of trend on the highest time frame there, and that's support, and so we're playing with that. Now we're playing around resistance. It's the end of the day. You're not going to be taking a trade. It's the end of the week. You're not going to be taking any kind of directional trade like this. We don't have enough information, but we had some great setups into these trades, into here at the bottom of the market, this resistance here, this support kind of going on. And again, let me show you those low risk entry points. So first of all, we've come into this resistance line at this point here. Now, is it going to keep going, break into new highs? We had a false breakout. I was actually long 87 even. I had to get out at 86 just for a small loss of 1. That was a little break to the upside where we had still strength, with the better sine wave indicators, the better trending system. And so I was thinking, well, maybe we're going to break this resistance. We had some exhaustion sell and some bullish divergence kind of going on here. Are we going to kind of break to these new highs and so on and turn this into a trending move? Well, turns out we just reversed and went the other way. We found resistance on the intermediate time frame and broke into this time frame. So now this looks better. So now we know our resistance line is in. We need to be trading in tune with this highest time frame. Once we've broken here, there's the next low risk entry point that comes in here. It's actually on this little rally back. We kind of get held by this little rally back as well. We continue into this really nice kind of sell-off here. So got out of my long trade, loss of 1, got short 83.75. Wasn't a particularly good entry. I was just kind of chasing it down here, but held on for 6, got out at 77.75, kind of down here. Could have squeezed out another point, maybe 2 out of here, but my normal target is 4, so I was very happy with the 6 kind of going on here. And then here's the setup for the reversal. So exhaustion sell. Look at all these blue professional bars. Blue dots kind of. That's exhaustion sell. Bullish divergence kind of comes in. We have end of trend on the lowest time frame. That little dot here. Then bang, and then we get pullback to end of trend on the intermediate time frame. So we know we've kind of found some area of exhaustion that we're going to have a rally back, and we start to rally back at this point. You got a low risk entry point there. You got another one here, but we know as soon as we got into resistance, we should be looking for playing this resistance to support. There's a little low risk entry point. It's kind of late into this move because this was the beauty. This was the thing that you should have been catching, kind of going down here, and then all of a sudden we have it all kind of coming together. Pull back to end of trend on the highest time frame. We've got all these support kind of going in on the lowest time frame, on the intermediate time frame. We've got another exhaustion sell, bullish divergence, flush pattern, all of that volume kind of coming out. So we'd had, this is the first move, then we come back in, we flush everybody out at this point here, exhaustion sell, bullish divergence, flush, bang, coming into there, and we're setting up. The trending system gets us into an uptrend here, starts signaling long, and there's our low risk entry point, bang, right here, beauty. Just at 77 or something like that into this long trade here. So that's the answer to the low risk entry points, is trade in tune with what is going on with the highest time frame. You can expect overshoots at some points. Sometimes we get overshoots of resistance, and it's go with the trending system. Once the trending system turns over and you're looking for overshoots to turn into kind of weakness using those low risk entry points, sometimes they're beautiful little bounces off a cyclical support like this on the highest time frame. Low risk entry point kind of comes in, but that's how to filter these out. Use these when they're in tune with the highest time frame. The question you're probably asking yourself is, well, couldn't you kind of just alter the code so that you could show less of these and only show kind of the good ones? Yes, and maybe over the next coming months that's what I'll do, is try to filter some of these out. But I'm always wary of adding kind of conditions and more kind of complexity to the code, because as soon as you do that, you start kind of tampering with the robustness of the code. So I'm more of the view that you should be using your judgment to take your trades rather than being purely systematic and filtering out based on kind of code what's kind of going on. But that's a personal view, because the market at the end of the day is a noisy data stream, with trendy activity and so on, but it's a noisy data stream, and that's what you need to be doing as a trader, is kind of getting used to that noise and kind of filtering it out for yourself. That's my personal view on this. But anyway, the secret is trade with the highest time frame in mind and filter out those low risk entry points based on that highest time frame. So hopefully that was helpful to you. I apologize if this video is kind of run a little long, and I'm sorry I'm losing my voice at the end of this video.